A large investment firm just dumped $18 million worth of Spotify stock. What does this mean for musicians? We're going to talk about it in today's video. What's up, guys? This is Omari with No Nonsense Music Marketing, the number one place for music business and industry advice online. If you are a serious musician that wants to do this full time, wants to make a career out of this, you need to be subscribed to this channel because we go over actionable content every single day. So hit that subscribe button, hit the notification bell to get updates on new videos. ARK Investment Management. None of this is financial advice. I'm not a financial advisor. Consult your financial advisor for financial advice. ARK Investment Management dumps $18 million worth of Spotify stock as their share prices continued to drop. Now, I said this pretty consistently. Not just the market overall, like obviously, yes, the market overall was going to drop. However, we focused on the Spotify stock because this is a music channel. And I was saying particularly that they were not innovating enough. So even if they did innovate on the Web3 front, such as, the NFTs, which this would be the perfect space for it. If there was one space that really could take off mass adoption for Web3 related products such as NFTs and work that in to an artist's revenue stream, Spotify could have did something with that. However, they doubled down on podcasts and audiobooks, which I think overall is going to be a decent move. However, it's a long payout. Right. It's a long time from when they keep putting in these tens of millions of dollars, hundreds of millions of dollars in advertising and seeing that come back to them. I believe they need to charge more for people to listen to music. There's other companies that for streaming services, Netflix has had price increases. Hulu has had price increases. This buffet style, if you're going to do the buffet style, which we're not totally for, as you look at our previous videos about this. However, if you're going to do the buffet style of you can just listen to all the music you want, you can watch all these movies. This one, Spotify, is a little bit different than Netflix or Hulu or Amazon because they don't have virtually all the movies on those platforms. They have a select amount of movies that you can watch, and then that's it. Like Netflix invests heavily into their own content to come out with, as does Amazon. Amazon doesn't do it as much, but they still do. And then Hulu has obviously their own programming, so on and so forth. With Spotify, it's not just Spotify releases that people are mostly listening to. That's mostly not. They are listening to other people's music. So with them, they need to be charging more in order to make up for that. This $9.99, this $10 a month, it's not enough. It's not enough to sustain the system. And most people would pay $20 a month. I mean, $20 is not a lot per month. $30 is not a lot per month to listen to all the music in pretty much in the entire world. It's most of the music in the world that you can listen to, whereas that is not the same with Netflix or Amazon or any of the video services. It's very limited in the scope of movies you're getting. Now, they'll add new movies every month, at the beginning of every month, but you're not getting every single movie on there. That you can't watch just any old thing. With Spotify, it is different. You can get any old song that you want to listen to. So what does that mean for their stock price? Obviously, they're not charging enough, number one, for the service, but then they're spending a ton to acquire the customer. So they did have an increase of 11 million subscribers in Q2 of this year. So it's up to 433 million. That's a good chunk. So it's still the number one. Well, YouTube is technically the number one music streaming service, and then after that, it would be Spotify. So they're getting close to 500 million subscribers. And they still have a lot of room to grow in that, but you have to at some point make some money in this space, which I think they have the ability to do. But investors don't like exactly what they're doing right now. Obviously, they don't like what they're doing because the stock is is virtually at the all-time low for the company, and it's down, nearly 5x from its high which was in early 2021, and that's when just people were just throwing money anywhere because they printed a bunch of money. So, what does this mean long term? I don't see like Amazon Music or Apple Music overtaking Spotify. They don't put enough effort into it. Amazon Music, Apple Music are pretty much just offshoots of huge, massive companies that could just throw on a music streaming service, but it's not that service is no competitive advantage over Spotify. Spotify is still better to use in terms of a user experience, at least subjectively, and from the numbers, people like using Spotify a bit better from the user experience perspective. You pretty much get the same content on there, virtually get the same content on there. However, it's just not a great user experience on Amazon Music or Apple Music, in my opinion, which is why I don't think they've caught up to Spotify. They didn't overtake a very huge chunk of market share. They're kind of getting the older people who may not have a Spotify subscription already and throwing that in as like an add-on of, hey, you can get this free trial of Apple Music or whatever when you sign up for this phone plan or something like that. And they're getting people to sign up for the other services. But I don't say this sways the opinion on how much you should market on Spotify. You should still have your 15% of your marketing going towards Spotify. So in case you haven't heard this before, if you have $1,000, you really want to split your music marketing spend into percentages. Whatever dollar amount you have, split it into percentages. So a lot of that percentage should be going towards driving traffic towards your website. So if you have ads going on Instagram or TikTok or Facebook or YouTube ads or Google ads or whatever, you want a lot of that going towards your website because that's something that you own. You own the data on your website. You own your email marketing list, your text marketing list. You own that list. Now, you don't own the people who send out the emails, like you don't own MailChimp, but you do own the emails on your list. So in case you want to take your email list off of MailChimp and move it on to Aweber or whatever, you can do that. So that's something that you own. And you own the files on your website. So you don't own the hosting company, right? But you own those files on the website. So if you want to switch hosting companies, you can do that. With your ad spend, you want to send it to things that you own mostly. And then after that, so that's like a good 40%-ish, 35% towards Instagram ads or Facebook ads, driving traffic to your website. Now, you can still direct them to Spotify afterwards, or direct them wherever you want, but you want them to at least touch your website first. Like, get to your website first and then send them wherever you want so that you can pixel them and keep that data. You want to spend about an equal amount, maybe a little bit less, on YouTube or Google Ads, because again, you want to have the option to send them to your website so that you can get that data, and you can actually get a bit more specific with the ads on YouTube versus Meta. You can get down to pretty much the song. You can put your song next to another song on YouTube. Can't really do that as much on Instagram or Facebook, but you can on YouTube. Additionally, you want to spend 15%-ish, maybe 20% towards your Spotify playlisting, because it's oftentimes cheaper to get a play from playlisting than it's cheaper to get a play from spending on ads. So we've run thousands and maybe tens of thousands of ads at this point. Whether that be Spotify playlisting or YouTube promotion or Instagram ads management. overall, it is a cheaper cost per play to get it on playlisting. So that's why you want to have some ad spend going towards it. You still get saves from playlisting. You still can find fans. It's just not going to be as direct as doing the Instagram ads for your music. And then lastly, you want to spend whatever budget you have left over on maybe TikTok ads, TikTok influencer promotion, testing out on different platforms. So if there's a different social media that has your target audience, then test it out there. Versus just spending all of it on one platform, because you never know what can happen to one platform. You don't own your Instagram page. You don't own your YouTube page. You don't own any of that. You pretty much own the two things I stated before, and that's about it. You don't own anything else. So these companies can take down your profiles at any time they want. You don't think it's going to happen. It likely will not happen. However, it can happen. So that's not to be paranoid. That is to be wise in your music business. So ARK Investment, led by Kathy Wood, dumped a lot of Spotify shares. The stock has just been falling overall anyway. But I wouldn't hit the panic bell. I would like to see them make some different decisions in what they're doing and what they're charging, so that they can make some money. Right now they make a lot of money. It's just that how it's being run, it's just not bringing in the net income that it needs to, not bringing the profit that it needs to for investors to be happy and keep the stock. So from its IPO, the time that the stock came out, it's about half of what it was at the IPO, which was about 4.5 years ago. So it still has time, but not the best stock to hold. I would not be buying a single stock of this and having that in my portfolio. However, if you are interested in that, it's at its all-time low. So if it's going to bounce back, then you want to get it low and sell it high. So obviously not financial advice. Consult your financial advisor. However, if you were interested in some Spotify stock, now might be a time to start dumping in a little bit of money and grabbing some shares. If you really believe in it, go for it. So in terms of holding your music on there, obviously, yes, have your music on there. Holding it as a stock, that's your own decision. But let me know what you all think in the comments section. If you thought this video was helpful, this is a macro view more so of what really goes into influencing the decisions of your music career on Spotify. Why do they do certain payouts? How much money do they have? How are they managing their money? So that you can make a wise decision in your music career. All right, so leave us a comment, hit the subscribe button, and I'll catch you in the next video.